All right, good morning. Today is October 14th, Wednesday. Looking at, well, this is the big contract, the S&P 500 December long-term monthly. And you can see the channel I've drawn from way back from March 2009 to the highs in May. We have broken outside of this channel, and the expectation is that we would test this line. Haven't gotten up there yet, but we did break the highs of September. We're not quite one time framing up yet, so I don't know if we're going to make a run for the highs based on this. If so, I'd like to see us get back inside this channel. Looks very similar, of course, on the mini chart. For true bearishness, though, I would look for a break below the 1773 level, which is a 23.6% retracement. All right. Looking at the pit session of the mini, we've got a break of September's high as well by 2 handles, and we are still treading water, I'd say, above the 20 moving average, which is bullish. We did break the monthly resistance one, and actually we're hovering above that now, although it's not really too relevant. It just does show the history. We had enough momentum to get through there, and also the previous month's high. Will there be further upside to be continued? There is some information on the daily chart, however, that will be helpful in understanding what may happen next. Okay, looking at the weekly chart, last week we gapped up and continued higher, and we did take out the high by, I think, 2 ticks, and this week we've taken it out by another 1.5. Well, taken out last week's high, but I meant the prior month's high, back here at 1175, which was this rally high, this swing high here. We are under the 20 moving average, and the 20 has crossed over the 50, which is slightly bearish, but on the longer term, again, it does look like we are moving up to at least test an area in here. And from a prior video, you might remember there was between this 2375 and 37 weekly moving average, I'm sorry, this level 2375 and 2037, which is the 50 weekly moving average. There's some other stuff in here that would likely pose resistance. We are above the weekly pivot point, which could provide support at 86.25. So that's a reference I would definitely have on my tactical charts. Okay, moving into the daily. This is a 24-hour session, but the purple line here is a 50 moving average, which we're above. And we had on Monday and Tuesday basically a doji type candles. It was a 2-day balance, and that balancing fell on Monday on the 34-day Fibonacci line, which could prove to be the high here if we trade back lower into this trading range. It's a point of turn is basically what happens on these days. It doesn't necessarily mean it's going to be a trend day one way or the other. Many times these days will fall on where there's a pivot in the market, it seems, and that's kind of what's happened here. Now we've got this bearish candle here from yesterday. We traded off. What I'm looking for is a test of this this balance area high. This is the trading range from here to here, which we've looked above. Anyway, what I'm expecting is that we might look into it and hit this 50 moving average, also this trend line right here. So we could possibly continue to sell off till we get in here. If we break through this 50 moving average at 79, and above that though at 86, which is right at this the top of this balance area, 86.25 is where that weekly pivot point was. So that's again important to, I believe, have that marked out on my charts. Okay, so that's what we're looking at on the daily. Now if we do continue higher, I've got a trading range that was quite lengthy up here that we need to find acceptance or rejection from to determine we're going to go higher. But right now we're sort of in between these areas, and looks like we're retracing a bit, and that makes sense after we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days of just going up, kind of topping off here. We're going to get a pullback, so we're getting that now. If that turns to anything else, we'll see. So let me look at the pit session daily. I also want to note, though, on the seasonal chart, you see that 1 year ago, this time of year, it sold off. This is earnings season, so we'll see what happens this year. There are some news reports today. One of them just came out. Don't know what it is. I don't know what the results are, but the report is retail sales, and then the producer index, producer price index. So those are out now, and then coming up at 10 a.m., which is not marked as a market mover, but still important, business inventories, and then the same designation at 2 p.m. for the beige book. So those are two other events to be aware of coming up today. They aren't scored as market moving, but they're, well, if you know what I mean. For example, I'll pull this in here. Okay. Since I'm talking about it, the red dots here being the market moving, and the green dots, let's see what they call that, merit extra attention. Here. I'm looking at the NASDAQ.com economic calendar. Okay. So, all right, looking at my pit session daily chart, you can see that we're sort of in between. If the labels weren't on these reference lines, this is a low volume area that we sort of are backfilling, it seems, right now. You can see where we have a balance area right here at the highs of this trade. The blue box represents this balance area, but inside those are time balance areas or volume balance areas, the gray boxes. But we're above the 50, above the 20. It's easy to see a retracement back to test the high of this range here, possibly even all the way down to this 20 moving average or to this 50. Just take it as it comes, one step at a time. I am a bit bearish this morning. I haven't really looked at the structure yesterday, and I wasn't in for trading yesterday, so I do know that we did close on the lows, and the overnight has balanced around there, so it might be a little too short. All right, let's look at the profiles. Okay, yesterday opened outside of Monday's range, which was a tight balance within balance. So we bounced around this spike area, okay, on Monday, the spike from Friday. Then on Tuesday, I'm sorry, let me back up here. From Thursday, the spike up here, we stayed within that on Friday, rotated. Monday, we couldn't take out the high of Friday or the low of Friday, stayed in value in range, so it was a balance within balance. And we opened outside of Monday's range, but within Friday's range and Thursday's upper range here, which I consider I have it actually split off as a separate, just like a separate day. I moved J off for another reason, but we'll put this back together. All right, so I have K split off as treating it as a separate day. So especially a 3-day balance. We looked outside of the 2-day balance. Couldn't take back many of these single prints. Came back in. This would have been a great trade to go long. And one time framed up, looked outside the high looked above and failed back into balance. One time frame all the way down, and ultimately the sellers gained control, took it lower, and repaired some of this spike area. Didn't quite make it to the spike base, but coming into today, and the overnight is looking like this. Let's pull that in. right here in the purple. So we've just basically rotated, kind of quiet, indecision. Looks like it's moving up a little bit. I'm going to say it's pretty much neutral. It's like a little bit long right now, but I think it's neutral. And we'll have to see if they get too short or what happened. But I'm going to have to go very quickly. But I think we ended up the poor low yesterday and ended on the lows. I'm not going to call this a spike per se, but I'm going to treat this again as a balance area all 4 days. So I'm going to treat this as balance. So right now we would open within range, but towards the lower end of the range, but still within value. So the ruling reason today is going to be value, and the balance in reference to all 4 days, which would include this spike. So I want to see if we get acceptance down into, you could consider this 2-day balance too, but into this balance area. That would be very, very bearish. If we look down in here and come back into yesterday's range or up back into this 3-day balance, that's going to be very, it's going to be neutral to bullish. But right now I'm favoring the downside. I would look for repair of this naked POC, and also for a possible later rally if we can't stay down in here. I do think the market's getting a little too short. There may even be a rally right off the open, but I would guess they would try to push it down a little further, and repair this, the spike base. So in effect, basically the spike rules are still in play. We really haven't done much except look above it and come back in. So looking for that spike base to be sort of the line in the sand of whether we're going to be bearish or bullish. And if we can't get value down in, really lower, then I would look for a rally back into yesterday's range, or even back out, to the upside. But that may not happen for a couple days. So anyway, that's what I'm looking at today: value and balance.